Hey, let's talk about how your credit score is determined. Hey, it's Kristi. Thank you so much for being with me for another video. Today, let's talk about something that's near and dear to my heart, and it's credit. So just side note, if you are really interested in knowing more about credit, the ins and outs and everything in between, I invite you to my podcast. It is called Credit Coaching by Kristi. I've got lots of episodes and lots of information there to help you build your knowledge base when it comes to credit. Credit is the foundation of everything. Unfortunately, if you don't have a credit score or you don't have a great credit score, it can really go against you when it's time to apply for loans that can help you leverage those things that you want in your life, say a car, your education, or your home. So let's dive into what makes up your credit score. It's an algorithm and it's more of an art than a science, but there are some generalities that I want to share with you. And it's different for every person, and I don't even know how to explain how or why, but it really is. We could have two people that start off at the same exact time establishing credit and could do the same motions, and unfortunately they're probably going to wind up with some slightly different variations in their credit score and even what's being reflected on their credit profile. So let's talk about first what has the biggest impact on your credit score, and that's payment history. So your payment history is so important, and it's really easy to explain. It is your ability to borrow money and pay it back on time. That's simply your credit profile in a nutshell. So your payment history says you can follow the rules. It's due on this date, you've paid it by this date. Easy peasy, right? Unfortunately, so many people miss their payment dates, and it could be we're just really busy and we overlooked it. We forgot that we used that one credit card just to try to keep it open and didn't make that payment on time because it's not something that's part of our normal thing. A lot of times I see this. Student loans are in deferment. So let's say you just finished school, you've got 6 months worth of deferment, and you didn't work out a new repayment plan, maybe extending out a deferment program with your loan servicer that holds your student loan, or maybe you just didn't know you were supposed to. About 6 months after graduation, your payments go into effect. But Navient and some of those other companies that service those student loans don't do a really great job of getting a hold of you. They probably have an email address from 4 or 6 years ago that you may not be using anymore. There's a really good likelihood you're not at that same mailing address either. So now, miscommunication. You didn't know this payment was due, and now you've got late payment after late payment after late payment showing up, and usually it doesn't get really reported through your student loans on your credit report until it's like 120 days late. And now you get this really big ding, Credit Karma or Equifax or whoever you monitor your credit through will say, uh-oh, Kristi, Mayday, we have something really bad that just showed up on your credit. And at that point, it's kind of impossible to undo. You can't call and just say, well, I didn't know, right? So payment history is really important. So if you are going to take on new debt, please set up an alarm in your phone, set up a reminder on a calendar, whatever it is that you need to do to not miss a payment date. Do not miss a payment date. It is that important. The next largest percentage of what makes up your credit score is amounts owed. And really where this is important is going to be on your credit cards. So there are actually two trade lines that are possible, either an installment loan or a revolving account. So an installment loan is going to be a mortgage, auto loan, student loans, something along those lines. It has a set payment every single month for an agreed upon time period. And a revolving is going to be either a home equity line or a credit card. So most people have a credit card or credit cards, and so you know that term. So what's important about this is what's referred to as a debt utilization factor. So the credit reporting bureaus will punish you if you carry a debt load of more than 30% of your limit. So in other words, if your limit is $1,000, you want to always keep that balance below $300. The next one is 15% of your credit score is made up of your length of history. And this is where a lot of people get tripped up. Now, if you are 18 or 20 years old and just starting off, the fastest and easiest and best way to have some really rich, deep, long history showing up on your credit profile is to become an authorized user on somebody else's credit card. So you want it to be a bank issued credit card, something like a Chase or a Capital One or Discover, something along those lines. And what's really important is longevity. So at least 5 years old. If you can find from a mom or grandma or somebody else in your life that has a really long history, 20 years with a bank issued credit card would be amazing. What's so cool about becoming an authorized user is that from the date that credit card started, that's what shows up on your credit profile, not from the date that it gets added to your credit report. So that's what's really significant. And again, make sure it's got a high limit, low balance, because that can affect your payment history part of the equation. Okay, so here's where we get really confused as a consumer. Let's say I've had credit for 25 years, right? I've had credit cards, and I've had auto loans, and I've had mortgages and those kinds of things. And then one of the reasons listed why my credit score is what it is because it says length of credit history is insufficient. I'm gonna be like, wait a second, I've had 25 years of credit history. So here's what's confusing for most people. We think it's ever since the date of when we started our credit profile. It's actually based off of the longest standing open trade line that you have right now. So if you have just recently refinanced your home, that mortgage that you've had for 5, 10, 15 years is no longer an open trade line. Once it's paid in full, it is closed. If you just if you had a credit card that you had in college, but the interest rate was really terrible, or they didn't give any perks, and you're like, I don't even use this card anymore, I'm just gonna go ahead and close it. That could actually hurt your score because you're ending that history, because if it's not open, it's no longer part of that equation. So the only things that are part of your history is going to be open trade lines. So just know that an installment loan, as soon as it's paid in full, automatically closes. And sometimes people want brownie points, like I paid that car on time every single month. I even paid it early. I hear that a lot. It's like, well, you're being a really great consumer because you're minimizing your interest charges that way. But the way that the credit scores, those algorithms are created, it's just based off of what's open. They don't give you any bonus points for paying early or paying extra. The next part makes up about 10% of your credit score, and that is your credit mix. I say this often, and I want to make sure I say it in this video as well. It's really important to have at least one installment loan and at least one credit card. You don't get extra points if you have 25 credit cards. I would encourage you not to have 25 credit cards. Really important to have a bank-issued credit card and then an installment loan. So an installment loan, again, is going to be a mortgage, an auto loan, a student loan. Now, here's a caveat to that. If your student loans, for instance, is currently in deferment, it's kind of a neutral status. It's not helping you, it's not hurting you, because there's just nothing to report. So you'll want something that is showing up as an actual installment loan. So there are a few ways that you can build credit without actually taking on debt. One example, and if you want to hear more about this, I've got a whole podcast about it on my podcast, Credit Coaching by Kristi. But a really quick example is if you go to a community bank. So look at one of the smaller community banks in your town and call them and ask if they have a credit builder account. It's basically a forced savings account. It withdraws a certain amount that you agree upon every single month, and it comes over here into this forced savings account on the other end. In the meantime, every time they draw out of your account, they're reporting to the credit reporting bureaus as a payment. Also, Equifax Boost allows you to report your utility payments, and it shows up as an installment payment as well. So you can report your water bill, your electric bill, your cell phone bill, those kinds of things. There are also some companies out there that for a very small fee will report your rent payments as well. So look into that, and then it will show up as an installment loan without having to take on any additional debt. And then the last factor that makes up your credit score is about another 10%, and this is on inquiries. Now, there's two different kinds of inquiries. There's a hard inquiry and a soft inquiry. So let me explain it really briefly. A soft inquiry is going to be for if you're setting up utilities, right? You just moved, you've got to have water and electric. They're going to tap into your credit just to make sure that, you have the ability to pay on time, because quite frankly, they're loaning you the utilities and then you're paying it after you have already consumed it. So we want to just make sure that you look pretty decent on credit. Also, they might determine out of that what kind of deposit. So they do look at your credit score, but since you're not actually applying for credit, it's not a hard inquiry. So when you're looking at your own credit, say through Credit Karma or freeannualcreditreport.com, any kind of monitoring service that you might pay for, that is just a soft inquiry. There's no hard inquiry because you're not applying for debt. Now, when you're applying for debt, that will show up as an inquiry. So a couple of things on this topic here. A hard inquiry means you're applying for some kind of a loan, right? You're applying for a credit card to be extended to you. You're applying for a mortgage, an auto loan, student loan, something along those lines. Now, even though there is a hard inquiry onto your credit report, this is when your credit score matters. If you're applying for an auto loan or a mortgage loan, you want obviously the very best credit score you can have. And now, right now, while it's getting pulled, is when it does matter. So hopefully you've listened to the advice of paying on time and having low debt utilization and those kinds of things, having the right credit mix so that you can have your optimal credit score. So just a warning, if you are shopping for something, if you're shopping for a car, or if you're shopping for a home, you can have multiple inquiries, hard inquiries from a couple of different, say, banks or lenders, which is fine. Just do it in a very short window of time. So if you're applying for a mortgage or a car, I want you to do it within about a 2-week time period. And I say 2 weeks because TransUnion on their website says that they'll allow it to be really just one, it's going to be multiple inquiries, but one hit to your credit score if it's within 14 days. Equifax and Experian say that they give you 30. So might as well not chance it. Try to knock it out within 2 weeks. And I mean, honestly, if you're looking for a mortgage relationship or an auto loan, I don't know that you would need to stretch that out over months, right? So just know if it's beyond that time period, it will count as a separate and standalone inquiry and can have a negative impact on your credit score. So if you're seeking some additional information regarding credit, join me over at my podcast, Credit Coaching by Kristi. Otherwise, put some comments below. If you've got a general question, I'm happy to answer that for you. We're all in this together. In the meantime, my friends, stay well.